Alrighty, folks, we need to talk about central banks, how they are choosing to operate differently. Some are clearly bringing the pain, and it's going to be felt for a long time. Others seem to be going after kind of a weaker currency policy. And to have this conversation, we have the one and only and great Jonathan Twomley today. How you doing, Jonathan?
I'm doing great, Michael. How are you?
I'm doing very, very well. So I don't know if you saw it this morning, but one of the first things I read this morning is the Bank of England came out with a surprising 50 basis point move, quite aggressive. They're now, I think, at 5%. They had a shockingly bad inflation reading here recently. So again, the central bank's like, that's my job. I'm going to do that. But I've been reading about the UK real estate market and their debt structures and just the amount of pain that landlords and homeowners were feeling before this surprising move. And I got to tell you, I think a housing crash or a bailout of some type, maybe extended for 10, has to come because this debt structure is really going to punish people and set them back. So what do you think about Bank of England?
Yeah, so I mean, I was surprised by all of the news out of England. The fact that inflation is actually coming back in England, unlike the United States, where it seems, even though it's not where the Fed wants it to be yet, it's definitely the trend seems to be in the right direction. Whereas in the UK, they actually have higher inflation now than they've had in a couple of years.
Yeah.
And there's a lot going on in the UK. Brexit is really making this more difficult. And actually, when I was in London earlier this year, the big news there was that, like the Soviet style supermarkets, meaning there's nothing on the shelves for people to buy
Oh,
because
really?
they had been importing everything from Europe before
Mhm.
Brexit, and you know now the shelves were empty, and they were actually having the supermarkets were it was kind of like COVID, here where the supermarkets were saying, you can only buy
Yeah.
2 pieces of chicken because we have shortages. In London in February, they were restricting how many tomatoes you could buy and all kinds of stuff like that because they couldn't get
Mm.
supplies, and supplies that were coming in had to go through a lot of red tape to get into the country because of
Right.
Brexit. And so that's also driving inflation. Why it's a reason why I think that um, England, the UK is going to be in for a tough time because they some of the federal the Bank of England has got they've got to show that they're doing something, right?
Yeah.
But they really can't do anything about Brexit. They can't do anything about the fact that the supply chains have been disrupted to the continent where they used to supply
Hmm.
all this produce and other things. Uh,
Yeah.
so that's a big problem. But they have to do something. So they're raising, and then on the issue of the housing market. I mean, I noticed that the Bank of England was at great pains to say, oh, well, most of the mortgages are fixed rates, so we don't expect there to be a problem. But I do believe that variable rate mortgages are much more common
Oh,
in
yeah.
in the
Clearly
UK
more
than they
common
are
based on the
here.
data I've seen. Yes.
Yeah, and so that there are a lot of people who are really feeling the pinch now because their payments have gone up by so much, and they weren't expecting this to happen.
Yeah.
So
And they just got hit again. It's a tough time. And again, Bank of England's just one. We have central. So the other thing about Bank of England Central Bank, and this just came to me recently. They're single mandate, right? You always hear about the Fed being dual mandate, right? Stable prices, full employment. Now you start hearing about stable markets. So maybe there's a tri-mandate here. Most of central banks are stable prices. They don't have that second full employment mandate. So if you're running around as the central bank of England and you get a surprise uptick in inflation, you only have one job, dude. You know, and one tool. So maybe this makes sense, but it's going to be painful.
yeah, absolutely. And
Yeah,
and um, it's going to be persistent in England, and I think the English economy
it's
is in for.
structural for a little while. Yeah,
I mean, until basically they start producing stuff in England again that they haven't been producing because they were getting it from Europe, or they restructure their relationship with Europe so that they can import stuff more easily again. I
hmm,
just don't really know what they're going to do,
yeah,
and so it's going to be they're in for some pain. On the other hand, if you're American, the dollar's going to be strong against the pound for a long
yeah.
time. So go go to London and
Yeah.
enjoy yourself.
There you go. Well, how
Yeah,
about the Bank of Japan? You have a long history in Japan. You've been there. You've had investors there. Bank of Japan appears to take a different strategy here recently. What's going on there?
yeah. So they are continuing to maintain their negative interest rate. They are at minus 0.1%, and
Wow.
um, and they are now at the unheard of level of inflation for Japan of like 3.5%, which is causing the same kind of political problems there that
Yeah.
7% on inflation was causing here. And it's a little bit ironic because they spent such a long time trying to get their inflation rate up to 2%,
Hmm.
and now they've kind of overshot the mark, but they're holding steady. I think probably because the BOJ believes that inflation is temporary, and they
Oh no, transitory is back.
well, but I think in their case they're really afraid of it. It's not so much that they're going out there saying, "Oh, don't worry about it. It's transitory." I think they're concerned that if they raise interest rates even by a little bit, that they're going to push themselves back into deflation.
Right.
So they're
Okay.
they're kind of still fighting, even though they now say they want to get it down to 2%. I think that they're worried about overshooting the mark in the other direction
Right.
by raising interest rates. And so what's happened now is the yen is tanked against the dollar.
Yeah.
Uh, and I mean, it hurts me personally because I have a lot of money at Japanese banks, and it makes it also very, very hard for my Japanese investors to invest here right now.
Yeah. Yeah.
So, to the extent that they invested money with me a couple of years ago, they're happy.
Right.
But
If the money was already deployed, they're good. But yeah, if it's
yeah,
still there,
but in
not
terms
so
of like
much.
new money, it's not coming over. So it is interesting to see this. I mean, this is I think frankly for Japan, this inflation is probably good because they've had low inflation for such a long time that they're now starting to get, Japan has had some of the lowest wages in the developed world for a long time, and it's really impacted the economy badly. And people, don't want to, the top talent doesn't want to go to Japan because the wages are low, and it had been kind of like sliding back towards, in some ways, like a structure of a less developed economy in terms of like the price structure. Today, so they have this annual, everything is very organized in Japan, right? So they don't have like wildcat strikes and stuff. They basically have like one big strike every spring,
Hmm.
and like everybody participates in it, and then there's like a negotiation. So and sometimes they don't even have a strike, but like I remember when I was there, it was like a 1 day strike and you couldn't take the train. It was like a big pain in the ass. But they just negotiated the biggest wage increase since 1992,
Oh
which is
wow.
which is when I was living. And I think this is good.
Yeah, me too.
This is a good thing for for workers in Japan, and they've also had a lot of the same problems with you know inequality, increasing over the last several decades as companies exported jobs to China, and so I think that this is going to be beneficial for the economy to have people have more money in their pockets, spend more money, have the yen be cheap. It makes it much cheaper to export stuff. So in Japan's case, I think it's good.
Hmm.
They're feeling pressure to try to get it down from 3.7 to something a little lower than that. But
Hmm.
did you also notice, Michael, that the ECB, the European Central Bank, also is
Hmm.
raising rates too.
Yeah.
They're at 3.5%, so they're still, which I was surprised by. I thought they would be higher. I thought they'd be more in line with the U.S. and the U.K., but they're also still feeling the need to be fighting
Yeah.
inflation with
Certainly.
high
Yeah.
rates.
And then we can talk about the Fed here, right? They obviously had a pause since we've last spoke. Now the argument is it a skip or a pause? I think there's arguments to be had for both of those. The skip argument that I've picked up here recently is Jerome Powell wants to set a standard that um, we can still keep going. I think historically the Fed hasn't paused and then restarted. I
Yeah,
think Powell wants to break the Fed put, which I've agreed with for 18 months now.
yeah.
Um, I understand that argument. It's not currently my thinking. I think he's paused for the next year at least. But yeah, we may not be done here in the United States. We may have one or two more rate hikes coming as well. So what do you think about all that?
Well, I mean, my history has been like take the Fed at its word, and they've said uh, they're going to, this
Yeah,
is a
two more.
skip, and then there's going to be two more. So I'm just going to go with that, because in the
Okay.
lack of, seems to me the best evidence of what they're going to do is what they say they're going to do, as opposed to
Sure.
what Wall Street says they're going to do after ignoring what they said they're going to do. So, I think there's going to be just what Powell says. But
Yeah.
I agree. I think they need to break. I think, too little, too late, maybe, but they've
Sure.
decided to make the Fed put and bring things back to historical levels. And unfortunately, because they left interest rates low for so long, and people got used to it, it's causing tremendous dislocation.
Yeah.
So
So my current stance is Powell is forced into a corner where he has to talk tough. I think CPI could very easily come in at 2.9. Now I know they look at PCE and there's all these other inflation metrics, but I believe you get a headline print of 2.9. You get a core reading sub 4.2, 4.3 as housing and used cars rolls over. I think they'll pause in July, but again, I agree with you. Up to this point, I've been with you. I've been like, Powell says it's coming, it's coming. I do think he has to talk tough today because he doesn't want to see the market rip when the market thinks the pause is real.
Yeah.
But you're right. Today you've been a fool to bet against the Fed. So this is the first time I'm in that camp that he's just playing possum, if you will. But I agree with you. We may have more, and if we have more, there's going to be a lot more pain coming to commercial real estate. And we're going to talk about Barry Sternlicht and folks like him in the next episode. But Jonathan, where can people find you?
Yeah, come by Apartment Investors Club on Facebook. You can join the conversation there, or you can always go to my website at Two Bridges Asset Management and join my investor list, as many of you have done. And I want to thank everybody who has done that. A lot of people have come over and joined the list. A lot of people have come to the Facebook group. It's harder for me to tell who's grabbing the download on apartmentinvestorsclub.com, but I'm sure a lot of you have done that as well. And I thank all of you for that too.
Yep. Also, folks, if you do join the Facebook group, just say hi from one rental at a time. I'd greatly appreciate it. Thanks, buddy.